Assalamualaikum and hello everyone. Today we want present analysis of corporate financial performance, a trend and comparative study of HSS engineer in Engineer Gudang Berhad. Firstly, I introduce myself. My name is Nurin Alisha binti Ahmad Rizwan and my friend is Nur Fitri Shamira binti Rizwan and Nur Farah Najia binti Zaha. For the background of HSS Engineer Berhad is HSS Engineer was originally incorporated as HSS Engineer Sdn Berhad on 23 January 2015 under the company Act 1965 in Malaysia. Later on 31 March 2050, the company was converted into a public limited company and renamed HSS Engineers Berhad. Short is a subsidiary and registered company. HSS Engineer operates as a leading engineering consultancy and project management service group in Malaysia and international. The company has a strong workforce of over 1,000 employees, with more than half being qualified engineers across various disciplines. In terms of operation, HSS provides engineering design and technical study, conducts construction supervisor and project management, and is involved in major construction projects such as road, highway, rail system, water project, and building. This company also offers BIM and digital engineering service, highlighting its focus on innovation and technology.
So next is Engineer Gudang Berhad is a Malaysian public listed company with a focus on engineering, construction and industrial property solution. So in previous, we know this company as a Dinasit Group Berhad. The company rebranded in 2022 to reflect its stronger and focus on engineering driven development. So the headquarters is in Subang Jaya, Selangor. Engineer Gudang Berhad operate through multiple subsidiaries involved construction service, industrial facilities development and property investment. So this company, their mission is to support Malaysian industry infrastructure grow by providing dependable engineering solutions.
I will be presenting the liquidity analysis for two companies, Engineering Gudang Berhad and HSS Engineers Berhad, covering the period from 2022 to 2024. Section 1, Engineer Gudang Berhad. First, let's look at the Engineer Gudang. Over the last 3 years, we can see a positive trend in their liquidity, while their total asset and liabilities have decreased in value. Their current ratio has actually improved, increasing from 1.3 in 2022 to 1.66 in 2024. Notably, their current ratio and quick ratio are identical, which suggests the company maintains very low or zero inventory, keeping their asset highly liquid. Moving on to HSS Engineers Berhad, this company also show a strong upward trend. Their current ratio started at 1.56 in 2022 and rose significantly to 1.97 by 2024. This indicates a very healthy ability to cover short-term obligations. So in summary, both companies are in a stable financial position as their ratios are well above the benchmark of 1.0. However, HSS Engineer Berhad currently show a stronger liquidity position compared to Engineer Gudang. Looking at the first graph on the left, which represent the current ratio, we can see that both companies have a steady upward trend. HSS Engineer Berhad, shown in green, leads the way, growing from 1.56 to the height of 1.97. Engineer Gudang Berhad, shown in orange, also show consistent improvement, rising from 1.3 to 1.6. This show that both firms are becoming stronger at covering their short-term debts using all the current assets. Next, let's examine the quick ratio on the right. This is a stricter test of liquidity as it excludes inventory. What is interesting here is the value remains exactly the same as the current ratio for both companies. HSS Engineers ends at 1.97, while Engineer Gudang ends at 1.66. This indicates that neither company release on selling inventory to meet their immediate financial obligations, which is a sign of high quality liquid asset. In conclusion, the graph confirmed that both companies are maintaining healthy and improving liquidity level, with HSS Engineer Berhad maintaining a stronger overall position throughout the 3 years period.
For the next point, the trend analysis. So we can see that both Engineer Gudang Berhad and HSS Engineers Berhad show improving liquidity from 2022 to 2024. However, HSS Engineer Berhad shows steady upward trend every year, while Engineer Gudang Berhad has slower improvement. This trend indicates that HSS Engineer Berhad is more consistent on improving its liquidity. Move to comparative analysis. When comparing the liquidity of both company, HSS Engineer Berhad maintains higher current and quick ratio than Engineer Gudang Berhad for all 3 years. And for Engineer Gudang Berhad, on the other hand, has a lower liquidity cushion, making it more vulnerable to a short-term finances obligation. And HSS Engineer Berhad consistently a higher ratio indicate a stronger short-term financial position. Move to overall assessment. From overall perspective, HSS Engineer Berhad shows superior liquidity management with a stronger ability to cover short-term liabilities. And for Engineer Gudang Berhad is improving in this area but still lags behind the HSS Engineer Berhad in liquidity performance. Creditor and investor would likely view HSS Engineer Berhad a more secure option given its liquidity position. So in conclusion, HSS Engineer Berhad has outperformed Engineer Gudang Berhad in liquidity over the 3 years period, showing better financial stability. So the consistency upward trend of Engineer Gudang Berhad indicates progress in managing working capital and financial stability. However, to match the liquidity strength of HSS Engineers Berhad, Engineer Gudang Berhad must improve it in short-term financial position in the future. So let's move to average collection period, which is ACP. It shows how long it takes for the company to collect payment from customers. For HSS Engineers Berhad had a ACP of 100 days in 2022, 103 days in 2023, and improved to 95 days in 2024. This shows steady improvement, but for Engineer Gudang Berhad had a very high ACP in 2022, which is 354 days, but reduced it to 233 days in 2023 and further to 105 days in 2024. This showing a great improvement for Engineer Gudang Berhad. In terms of comparative analysis, HSS Engineers Berhad maintained consistently for a shorter SCP, reflecting stronger control over their receivable. Engineer Gudang Berhad showed a major improvement in recent year, moving closer to HSS Engineers Berhad. In terms of comparative analysis, HSS Engineers Berhad maintained consistently for a shorter SCP, reflecting stronger control over their receivable. Engineer Gudang Berhad showed a major improvement in recent year, moving closer to HSS Engineers Berhad figures. Now we are looking at total asset turnover, which show how efficiently a company uses its asset to generate a sale. So for HSS Engineer Berhad, total asset went from 0.46 in 2022 to 0.50 in 2023, but dropped slightly to 0.48 in 2024, showing small inconsistent and improvement. But for Engineer Gudang Berhad started with a low total asset turnover of 0.05 in 2022, but improved 0.08 in 2023 and expected to reach 0.19 in 2024, showing much faster growth. In comparative analysis, we can see that HSS Engineers Berhad has consistently outperformed Engineer Gudang Berhad. Although both of the companies have seen improvements, but HSS show better result, but the gap between them is slowly closing. Next, in the trend analysis, we can see that Engineer Gudang Berhad's Next, in the trend analysis, we can see that the Engineer Gudang Berhad total asset turnover shows a stronger upgraded interaction, show faster improvement in asset efficiency compared to HSS Engineer Berhad, which has shown slower and more gradual progress. Firstly, let's compare from both companies for overall performance. For HSS Engineers Berhad is stable and steady progress, but it could improve more quickly. And for Engineer Gudang Berhad has shown impressive recovery, but their poor performance show they still need to work on their asset management. So I conclude here that HSS Engineer Berhad is stable but slow improvement, while Engineer Gudang Berhad is recovering well but still has some weakness to address.
These slides show the debt ratio analysis for HSS engineers from year 2022 to 2024. The debt ratio measures how much of the company's assets are financed by debt. It is calculated by dividing total debt by total asset and multiplying by 100. In 2022, HSS engineers record a debt ratio of 15.10%. This means about 15% of the company's assets were financed using debt. In 2023, the debt ratio decreased to 12.19%. This showed that company reduced reliance on debt compared to the previous years. In 2024, the debt ratio further declined to 9.89%. This indicates an improvement in the company's financial position, with more assets financed by equity rather than debt. Overall, HSS engineers maintain a low debt ratio throughout the 3 years. This reflects a conservative capital structure and show that the company relies less on borrowing, which reduce financial risk. Next, these slides present the debt ratio analysis for Engineer Gudang Berhad from 2022 to 2024. In 2022, Engineer Gudang Berhad recorded a high debt ratio of 57.9%. This means more than half of the company's assets were financed by liabilities, indicating higher financial risk. In 2023, the debt ratio dropped significantly to 31.4%. This showed that company reduced debt level and improved its capital structure. In 2024, the debt ratio further decreased to 23.9%. This indicates continued deleveraging and stronger financial stability. Overall, Engineer Gudang Berhad showed a positive trend with a significant reduction in debt ratio over the 3 years, reflecting better financial management and lower reliance on debt. Let's compare the debt ratio of HSS engineers and Engineer Gudang Berhad from 2022 to 2024. Overall, HSS engineer consistently show a much lower debt ratio compared to Engineer Gudang Berhad. This indicates that HSS engineer relies less on debt and has a more conservative financial structure. In 2022, HSS engineer recorded a debt ratio of 15.10%, while Engineer Gudang Berhad had a much higher ratio of 57.9%. This showed that Engineer Gudang was highly leveraged at the beginning of the periods. In 2023 and 2024, both companies showed a declining trend in debt ratio. However, the reduction was more significant for Engineer Gudang Berhad, decreasing to 31.4% in 2023 and further to 23.9% in 2024. This rapid decline suggests that Engineer Berhad has been actively reducing its liabilities to lower financial risk and improve solvency. In conclusion, HSS Engineers maintain a low-risk, equity-based financial strategy, while Engineering Gudang Berhad internally relied more on debt but has taken strong steps to reduce leverage over time. Then this slide shows the times interest earns ratio for HSS engineers over 3 years. The time interest earned ratio measures the company ability to pay interest expenses using this operating profit, which is EBIT. In 2022, HSS engineers record a tie of 7.59 times, meaning the company could cover its interest expenses more than 7 times using its earnings. In 2023, the ratio increased to 10.68 times, showing a significant improvement in the company's ability to meet interest obligations. In 2024, the tie further improved to 11.70 times, indicating stronger operating performance and better financial stability. Overall, the upward trend shows that HSS Engineers is becoming more efficient in generating earnings and has a low risk of failing to pay interest, as a tie above 5 times is generally considered safe. For this slide, show the times interest earned ratio for Engineer Gudang Berhad. In 2022, Engineer Gudang Berhad recorded a tie of 11.13 times indicating a strong ability to cover interest costs. In 2023, the ratio decreased slightly to 9.05 times, showing some fluctuations in earning relative to interest expenses, but it still remains well above the safe benchmark. In 2024, the TAI increased significantly to 21.84 times, reflecting a major improvement in operating performance and much lower financial risk. Overall, Engineer Gudang Berhad maintained a strong and improving interest coverage. Since a TAI above 5 times is generally considered safe, the company is financially stable with a low risk and interest payment default. Overall, both companies maintain healthy interest coverage as all TAI values are well above the generally accepted safe benchmark of 5 times. HSS Engineers show a steady and consistent improving over the 3 years, increasing from 7.59 times in 2022 to 10.68 times in 2023 and 11.70 times in 2024. This indicates stable growth in operating earnings relative to interest expenses. In contrast, Engineer Gudang Berhad show more fluctuation. Its TAI was 11.13 times in 2022, declined to 9.05 times in 2023, but then increased sharply to 21.84 times in 2024. This suggests a significant improvement in operational performance and much stronger ability to cover interest costs in 2024. In conclusion, HSS Engineers demonstrate stable financial performance, while Engineer Gudang Berhad show higher volatility but achieve a very strong interest coverage by 2024.
For this slide show the operating profit margin of HSS Engineering from 2022 to 2024. This operating profit margin measures how efficiently a company generates profit from its sale before interest and tax. In 2022, HSS Engineering recorded an operating profit margin of 12.92%, indicating a moderate level of operational efficient. In 2023, the margin increased to 60.58%, showing that the company improved its cost control and productivity while maintaining sales growth. In 2024, the operating profit margin further improved to 18.15%, reflecting stronger operational performance and better management of operating expenses. So the steady increase in the operating profit margin over the 3-year period indicates that HSS Engineers has improved in operational efficiency, inventory management, and overall productivity. For the next one is present the operating profit margin of the Engineer Gudang Berhad from 2022 to 2024. For this one is show the operating profit margin, show how the company efficiently earns profit from its sale before tax and interest. In 2022, the margin was 160.74%, indicating very strong operational performance where operating profit was significantly higher relative to sale. In 2023, it decreased to 125.18%, showing that operating costs began to rise faster than sales but still maintaining higher margin. By 2024, the margin dropped significantly to 63.39%, suggesting reduced efficiency possibly due to higher costs or weaker cost control. Overall, from 2022 until 2024, Engineer Gudang Berhad showed the consistent downward trend in operating profit margin. This indicates increased pressure of profitability and may signal portional risk, particularly in cost control and inventory management. This company should review its operational strategy to improve efficiently and stabilize margin in the future. For the next comparison of the operating profit margin of HSS Engineer and Engineer Gudang Berhad from 2022 until 2024 is for HSS Engineer, the operating profit margin increased steadily over the 3 years. It rose from 12.92% in 2022 until to 80.15% in 2024. This shows that HSS Engineer is improving its efficiency and managing its cost better each year. On another hand, Engineer Gudang Berhad experienced a continuous decline in operating profit margin. It decreased from 160.74% in 2022 and further down the 63.39% in 2024. This suggests that the company may be facing higher costs of problem in managing operation. In conclusion, even though HSS Engineer has a lower margin, its performance is improving. Meanwhile, Engineer Gudang Berhad needs to improve its cost control and operational management to prevent further decline. This slide represents the net profit margin of HSS Engineer from 2022 to 2024. Net profit margin shows how much profit the company earns after tax for every ringgit of sale. In 2022, HSS Engineers record a net profit margin of 8.13%. This increased to 10.90% in 2023, reflecting improved profitability. In 2024, the net profit margin rose significantly to 40.8986%, driven by higher earnings and increased sales. Overall, this steady rise in net profit margin from 2022 until 2024 indicate improved operational efficiency and stronger return to shareholder. Okay, for the Engineer Gudang Berhad, net profit margin from 2022 until 2024 is net margin is measure how efficient this company generate profit after tax from its sale. In 2022, Engineer Gudang Berhad record a very high net profit margin of 148.51%, mainly due to the earnings after tax being significantly higher than sales for that year. In 2023, the net profit margin declined to 88.16%, indicating a reduction in profitability despite a higher sale. In 2024, the margin decreased further to 51.19%, showing continued downward pressure on the profit generation. So in the conclusion, in the net profit margin showed a decline trend from 2022 and until 2024, which suggests that Engineer Gudang Berhad became less effective in generating net profit relative to sale over the 3-year period. This indicates the need for improvement cost control, the operational efficiency going forward. This is comparison for net profit margin earned by HSS Engineer and Engineer Gudang Berhad from 2022 to 2024. Net profit margin show how efficiently a company converts its sale into profit after tax. For HSS Engineer, the net profit margin increased steadily from 8.13% in 2022 and then further to 40.86% in 2024, including continuous improvement in profitability and cost efficiency. So, in contrast, Engineer Gudang Berhad record a very net profit margin from 148.51% in 2022, but declined and to the 51.19% in 2024, showing a consistent downward trend in profitability. So the overall auto Engineer Gudang Berhad maintains a higher net profit margin throughout the period. In declining trend suggests weakening profit efficient. Meanwhile, HSS Engineer show a positive and improving trend, indicating stronger operational performance over time. For the next one is the return on asset or ROA for HSS Engineer from 2022 until 2024. This is measure how efficiently the company used to its total asset to generate profit after tax. It is calculated by dividing earnings after tax by total asset. In 2022, HSS Engineer recorded a ROA of 3.75%, indicating a relative modest return on its asset base. In 2023, ROA improved to 5.43%, showing better utilization of asset to generate profits. In 2024, the ROA increased further to 7.15%, reflecting significant improvement in asset efficiency and overall profitability. So the conclusion, the upward trend in ROA from 2020 to 2024 indicate that HSS Engineer has become more effective in using its asset to generate return. This also suggests improved financial stability and higher return on the company investment. For the next slide is return on asset or ROA of Engineer Gudang Berhad from 2022 to 2024. In 2022, Engineer Gudang Berhad recorded a ROA of 7.47%, indicating a reasonable return on its asset base. In 2023, ROA remained stable at 7.41%, showing consistent asset utilization despite slight change in earnings and assets. In 2024, the company achieved a significant improvement with ROA rising to 9.90%, reflecting stronger profitability and more efficient use of assets. So overall, the increased trend in ROA from 2022 to 2024 suggests the Engineer to Gudang Berhad improved its operational efficiency and financial stability, likely supported by increased demand and better asset management. For this slide, it shows a comparison return on asset of HSS Engineer and Engineer Gudang Berhad from 2022 to 2024. For return on asset is measure how efficiently a company show the total asset to generate profit after tax. For HSS Engineer, ROA increased steadily from 3.75% in 2022 and further to 7.15% in 2024, showing continuous improvement in asset utilization and profitability. Meanwhile, Engineer Gudang Berhad recorded a higher ROE throughout the period, starting at 7.47% in 2022 and increased significantly to 9.9% in 2024. So overall, Engineer Gudang Berhad demonstrates stronger asset effectiveness compared to HSS Engineer, indicating that its management is more effective in generating higher profit from assets. However, HSS Engineer show a positive upward trend, suggesting improving performance over time. Okay, for the lastly, in the conclusion, based on the financial performance analysis from 2022 to 2024, HSS Engineer demonstrates stronger and more stable overall financial performance compared to the Engineer Gudang Berhad. HSS Engineer show effective operational management supported by higher cash level, stronger activity ratio, and a low stable debt structure. In profitability ratio, also show a constant upward trend, indicate efficient management in generating profit. On the other hand, Engineer Gudang Berhad has made improvement in certain areas, particularly in reducing in debt ratio and improving its average collection period and return on asset. However, its liquidity position remains weak, and its profitability margin fluctuates over time. So overall for all the financial is despite Engineer Gudang Berhad progress, HSS Engineers remains financially stronger and more stable across the 3 years period. Therefore, HSS Engineer is a more favorable financial position based on the overall trends and comparative analysis.